submit that many questions. You guys are letting me down. Just letting you know. Really disappointed. Okay, let's see. No, it's okay. Here, let me put this up. Okay, there's that. You guys can have that, and then we will get going with the Q&A.
Okay, so I'm going to do my best to read through all of these, and then we'll read through the answers. If I say something that doesn't make sense, feel free to interrupt, or I'm just going to try to recite them. So when we are dealing with election pay, stating that they are not subject to income tax, does that refer to federal only or federal and state? Is there something in writing like a state code or federal law that states this? So because I'm very annoying, I feel the need to point out right away when I read this question that election pay is taxable, right? If you are an election worker, you have to pay taxes on that. The difference is there is no income tax withholding. So the difference is on the employer's side, right? The employer doesn't perform a withholding, but if you work the polls, you are actually legally obligated when you file your personal taxes to tell the federal government about it and to pay taxes on that income. Whether or not poll workers actually do that is up to them. I don't know if they're doing it. I suspect there are a lot of people who are not reporting that income unless they get audited, but it is taxable. So that's just one of those annoying common misnomer things. It's taxable, it's just not subject to withholding. Regarding the question related to state withholdings, there is a requirement for, there is no requirement for a state income tax withholding, and the citation here is Indiana Code 6-3-4-8, subsection D. That says that you don't have to perform a state income tax withholding for precinct election workers. So those are your line poll workers, okay? I don't know, do people feel comfortable with that? Do they remember all the other requirements for election workers? I feel like this is a pretty sophisticated group, so. Yes, and also it will be in, when we send out the answers on this, you will see it there as well. It's 6-3-4-8D. And let's see, do I have it up? Stacy's looking at my tab management and she is disappointed. No, I don't have it up. But
I'm not disappointed. I just see your brain now. Like, I see it. That's a lot of tabs, people. Like 5,000. No, I'm just kidding.
It's a scary place.
It's like 10. It's enough tabs to give me anxiety in this current moment.
Okay, the next question. When the commissioners put particular policies in place but do not specifically mention elected officials in those policies, do we fall under those policies? For example, the commissioners put an RFP policy in place, I think that's a request for proposals policy, and only mention department heads, which I take that as to mean that we don't fall under the commissioners. Am I wrong in this thinking? There's no way to universally answer this question, right? There are going to be certain policies that are promulgated by the commissioners that apply to elected officials and unelected department heads at the county. There are going to be others that apply only to unelected department heads. For example, a travel policy, if it's promulgated by the commissioners, that's going to apply to all of your employees, right? That's going to be within their authority to issue a travel policy. A purchasing policy, county purchasing policies, if you have a local purchasing policy that supplements state purchasing requirements, that's going to apply to every county department, elected, unelected, and otherwise. I think when we're talking about RFPs, we're probably talking about something that fits within something like a purchasing policy, and so that's going to apply universally to your departments as well as those departments that are headed by unelected officials. So. Per HB 1001, which we talked about at length yesterday, there is a requirement for area plan commission fees to be deposited to a special fund for reimbursing costs to the units. Can you provide more information on this? Okay, we discussed this forever yesterday. Maybe not forever, but we discussed it at length. We are going to be prescribing a new fund, or potentially funds, but we're going to be prescribing a new fund for this. Look for that guidance. I know that we're coming up on July 1 when the statute is effective. We will be getting you information on that before July 1. Just sit tight. It's coming. So, Is it a violation? Okay, next question. Is it a violation for an active council or commission member to vote on any matters pertaining to their spouse who also works for the county? An example would be pay or raises. The answer is no. So this is pretty close to what we just talked about in the last presentation. There's no statute that would prohibit a council member or commissioner from voting on matters pertaining to their spouse. I will tell you, in my experience in local government, it is commonplace, though not required, for elected individuals who are voting on matters that might pertain to a relative to voluntarily choose to recuse themselves, just to avoid any appearance of impropriety. But it's not required. It's just a voluntary choice that that elected official might make on votes like that. So, okay, we have a company that is saying late fees are required to be paid by law. They are saying failure to pay late fees will result in a breach of contract and can be taken to small claims court. Is this true? So it's a little complicated. I'm not sure what late fees we're talking about or what law might require them to be paid. My suspicion is that we're really talking about a contractual provision on late fees. This again is a common misconception that we used to encounter, that public entities can't pay, local governments can't pay late fees. They're not allowed to. There's no such rule, actually, right? It's possible to pay late fees. The rule is if there is negligence on the part of, say, a department head in getting an invoice paid timely, that department head might be personally liable for any late fees that result. That's the rule. The rule isn't that you can't pay late fees. It's that if you're super negligent and cause unnecessary penalties and fees to accrue, you might be liable for them yourself. And we would be the agency that tells you about that. So I see a question way at the back. So is that Chris?
Yeah, thank you for your glow stick. I was going to bring one because you can only speak if you have the spirit stick, okay? Or is it you can't? Don't drop the spirit stick? Okay.
I'm so glad you're not making me hold the spirit stick right now, Stacy. Thank you.
Just wait, Mike. You might have a question.
Okay, so I have this issue in the county with credit card payments on departments where they're not submitting their credit card payment in a timely manner. I actually have had the bank tell us they're not waiving any more late fees or waiving any interest. So are you saying that if we can show a pattern of this, how do we handle that? Because I've sent emails out, everything, it's like it's just poof in the air, you know. I feel like I've covered myself, but like literally this just happened. The bank contacted me 2 months ago and said, we're done.
I know what advice I would give. Stacy, do you have some advice that you might give on this?
Okay, so Tony distracted me by handing me 2 of these. So I apologize, but I think I know what's happening. So correct me if I'm wrong. You can document who is getting you the information late so that you can't pay them on time. Is that what's happening? Okay. You can show that it's not you, that you have all the information and you're paying it timely when it's received. Okay. So you have a couple options. Keep documenting, because that is what we would look at during audit. So if we see, because in Chapter 1 it had penalties, interest, and other charges, that's our guidance where we would write you up against. That's the criteria that would fall under. So during audit, we would say, who is at fault? Is it Chris, or was it because they didn't send all the documentation in so that it could be paid timely? We make that determination based off what you have, and I would recommend, if it's a continuing thing, you do all your communications in writing so that you have that documentation. You could, again, credit cards are a privilege. They're not required. So depending on your local policies, because I bet, does your local policy talk about anything if supporting documentation isn't turned in timely? I would recommend abuse. Okay, it might be because most credit card policies have things on abuse. However, if we consider this abuse where you are not turning in information timely so that it's paid, then you're abusing the privilege of having that card. So they have to get it to you within a certain amount of time. So I would recommend looking at your local policies, see what you have in place to try and enforce this. I feel like you're not the only county that's going through this, so I would recommend, again, if it's within your authority and you have policies and procedures on abuse, you could shut the credit card off, make them go through the claims process, then they're going to learn that they need to make sure that they're getting you things timely. Or you make them pay the penalties and interest. If your policy says that it's them that has to pay it, go to them, make them pay it. That's what and just document, because you want to be the one, since you're paying, you're making sure you got to get the claim. They need to all be aware that you have to have time to certify the claim, make sure all the documentation's there. Then you got to get it on the docket and in front of commissioners so that they can approve it. If there's not enough time for that, then they need to be getting you things more timely. And I would recommend cutoff periods, more emails. If they're not responding to those, do it in public meetings, make discussions, things like that, because make people aware that it's not you that's doing it.
What their complaint is we have 2 claim dockets and they're not getting the statement in the mail. But yet I've set every department up on online so you can log in every day if you choose to. So they're just out of sight, out of mind. They wait till they get the paper bill, and it's too late to submit it to get on time, with the claim docket.
I would recommend, if you've set them up with online access, look at your policy, see if your policy details out what they're supposed to be doing. And it might be, what if you have access to it online, you can download it and you send it to them via email. So then in this instance, you're showing, hey, you're not waiting until the paper copy. Here's the electronic copy. Get me the information so it appears on the claim docket. That's what I would do to start the process and show that you're sending it to them timely. They're choosing not to getting you the information timely.
Yeah, and this, I agree with all of that. I would also say, feel free to say, look, State Board of Accounts comes in here every year and audits us, and they have charged people civilly when they are not paying claims on time and they are unnecessarily accruing penalties and late fees. That could be you, right? Here is their uniform compliance guideline. This isn't a joke, right? You really need to be getting these claims. You need to be getting everything to me timely so that we can pay the claims without accruing any late fees, right? I mean, this is for real, right? So, I don't know, scare them. But
I would do.
Stacy's clearly a mom, so, okay. Next question is, we have 2 EMS, 2 emergency medical service providers. With the new local income tax structure, can we use LIT for EMS since it is not county-wide? So the first thing I want to say is there is a lot of time before we get to this place, right? The new LIT structure now is applicable in 2029, so that's a ways out. I am curious to see when we get to 2029 if there have been additional changes to the LIT structure, or if it's been further delayed, or if, for example, potentially the EMS and fire portion has been eliminated. So there are many, many, many things that can happen between now and 2029 to the planned LIT structure that the General Assembly has given us. I do not have any inside information on that. I don't know what's going to happen. I'm just saying we're going to have a lot of legislative sessions between now and then, and so we don't know what the end result will look like. Ultimately, when I read through the new LIT structure for fire and EMS, it looks like the only entities that are eligible for a portion of this, even though it says fire and EMS, are those fire departments or fire protection territories or fire protection districts that are within the county. Now, some of those may only provide EMS services, but that's the way that I read the statute. That said, this is really within the Department of Local Government Finances realm. They're going to ultimately decide whether or not. Okay, so Jackie wants to say something, but they're ultimately going to decide who gets a distribution. Go ahead, Jackie.
Yeah, that EMS and fire will be, is eligible for the county to get part of it. That legislation changed this current year.
Okay, so.
Yeah, so, and I believe it's going to be able to go to any entity that has EMS and fire,
So that's a new change.
There was verbiage change this year, but I can't tell you exactly what it was.
Got it. That's a new change. Here's what I'm going to tell you. Our agency is not going to provide guidance on this ultimately. It's going to come from the DLGF, right? They administer this. Sit tight and wait for them to get guidance out. And again, we have a long runway here. 2029 is now the implementation date. Was there another question at the back?
Oh, he is confirming with Jackie.
Excellent.
Jackie's right.
Great. So we've got multiple people who are telling me that I should have read new legislation better. So I appreciate you, Jackie. Thank you. Okay, the next question is about the lane mile direct distribution. This is actually a question from a statute that was passed last year, 1461. The question is, lane mile direct distribution, completely separate fund, question mark, and would this be treated as a grant, a state or federal grant? Yes, the guidance is that this distribution would go into a completely separate fund. I think that's right, Stacy. Can you confirm that? It has restricted uses, though, so restricted uses similar to the Community Crossings matching grant, and it gets placed in its own fund, and so in that sense, it's like a grant. I don't know that it is a grant, so I don't know that the consequences of spending it inappropriately are the same, or as Shelby very wisely pointed out, the process by which you get the revenue does not involve a grant application, right? So the process of getting the revenue is different as well, so in that sense, it's not like a grant, but it's also kind of like a grant, I guess. I don't know. Do you have anything to add to that, Stacy?
When did that distribution start? That's the only.
It doesn't. It has not started yet. It starts, I think, is it July 1 of 2027? Is that when it starts? Or 2026? July 1, 2026.
Is it 26? 7/1 of 26.
I think it's 7/1. Yeah, so I'm hearing some yeses. I think that's right. 7/1 of 26. I said 7/1 of 27, but it's 7/1 of 26.
Because I think that's one of our new funds that we're adding, and we'll shift out guidance. Most likely, the June bulletin is one you're really going to want to read.
Yeah.
I have a feeling there's going to be a lot of things in it, including this. So.
Okay. Any questions on that? Further ones? How do I request an audit of a nonprofit organization? The organization doesn't receive government funding. Boy, I have no idea. That's a great question. The only thing I can tell you for sure is that the SBOA does not have the statutory or legal authority to audit the finances of private nonprofit corporations that don't receive any government funding. That'd be super cool if we had that power. We would be so powerful if we could just be like, guess what, Kroger, we're going to come audit you. But the General Assembly does not want us doing that. That'd probably stretch us pretty thin, too. So you'd have to ask the private nonprofit corporation to voluntarily do an audit. We can't force them to do it. You probably can't force them to do it, but I think that's the answer. So bad news. Okay. Couple of clarifications. So Jackie very wisely pointed out that when I was talking yesterday about the Municipal Unit Strategic Task Force, these MUST groups that are now in code related to local income tax work and sort of putting a collaborative group together from the county and various cities and towns, that I had stated that a county council member is a member of the group. That is not correct. It is a county council representative, which can be it could be a county council member, right? That could be the representative, or it could be somebody else. It could be an attorney who's representing the county council, or it could be a fiscal expert who's representing the county council, whoever the county council might select. So I think Jackie pointed out, Tony also pointed it out, I think. So we had lots of people pointing out my mistake. I appreciate you. It is a team. Thank you. It is a team effort. So, okay, stipend that has to be on the salary ordinance. Does it need to be paid out of the 1,000 line as opposed to a normal supplies line, or would we pay it that we would pay out for a clothing stipend? So I think, if I'm understanding correctly, the question is about expense categories, right? Does it need to be a Category 1 expenditure, or can it be what I call a Category 2 expenditure? Either is fine. It could fit either under Cat 1 or Cat 2. Either way is good. So certainly we're not going to take exception. Both make sense for a clothing allowance stipend. 17, building and planning. How will it change how they do their budget? So there are a couple of things related to HB 1001. Again, this is another question along those lines. First off, somebody had mentioned the very clever idea of reimbursing the general fund. Stacy and I sat down yesterday and we looked through HB 1001, and the language in that statute does seem to very much lend itself to the possibility that you could pay expenses out of the general fund and then reimburse the general fund. So I think I can't see how we could take exception to it. The way the statute reads, here I'll read it, any fee assessed and collected by a unit must be maintained in a special fund dedicated solely to reimbursing the costs actually incurred by the unit relating to the imposition and amount of the fee. So the relating to the imposition and amount of the fee is relating to those planning and building permit application costs. So I think the fact that it uses the word reimburse would lend itself to that. So I don't know if that's sort of what the question on budgeting was about, but for now, I can't see how we would take exception to that at the State Board of Accounts. I did also want to point out one other thing related to 1001, which is that there is sort of this exception. We mentioned yesterday that to do increases, you're only supposed to do them on a 5-year cycle and only in accordance with the CPI. There is a little bit of loose language in the statute that would allow local units of government, counties, cities, and towns, to increase those costs if the cost to the unit substantially increases and you hold a public hearing to determine that. So there are some limited ways that you can go with something more than the CPI if you can document it and you hold a public hearing in front of the appropriate body to have those fees increase. So I wanted to mention that as well. I can't wait till I get done and it's your turn, Stacy. We're getting close. So
You're going to get the glowing sticks. You know that, right? You're going to have to carry them around. Like,
just
it's the thing.
Don't take a picture of me with
I
that.
will, 100%.
Oh, it has to be on video. That's right. Okay, so our county commissioners went to the commissioners conference, and one of our county commissioners went to the commissioners conference, and a private company paid for his hotel expenses. The next year, the commissioners awarded a contract to the same company. Is this a conflict of interest? Should the commissioner have filed a conflict of interest statement and report the hotel expense? I don't see this as being a conflict of interest under 3544.114. What I am really concerned about, though, is that it may be a problem under our uniform compliance guidelines related to gifts and donations, right? When somebody's paying for an expense that would normally be covered by a county, that's a gift or a donation, right? So it has to be accepted by the commissioners. It has to be, all of those things have to happen. That makes me nervous because I'm worried that none of those things happened. So keep that in mind. It seems strange that would be like a donation to the county, but I think it is. Do you have any other thoughts on that one, Stacy? Okay. Guess what? It's your turn. So.
Okay, let's switch. You get the spirit stick. You have to smile and do a cartwheel by holding it. You only have to take one. I want to keep one.
End up in the hospital if I try to do a cartwheel. So.
Oh my gosh, this is so small. How can you read this? Okay. Go to the top. Okay. What is the process for entering investments on the AFR? Is the person still in the room, or do you want me to explain both a fund investment and total monies investment? You want me to do both? Do you want to do only funds? I only got like a sure, like it wasn't like, yes, do both, please. Do both? Okay. Oh, okay. We'll just do both. Okay. So if we're doing a total monies, the investment associated with total monies on deposit should be, instead of be recorded as part, should be recorded as part of the beginning balance, okay? Because whenever it's a total monies investment, it is not a specific fund investment, okay? It's not leaving the fund. You are investing total monies so that you don't need to record the purchase and sale of the investment, and it doesn't then show up because, you know, if you're looking in your financial data by fund section, you see beginning cash balance and beginning investment balance. This is where it's different. Whenever it's a total monies, it continues to stay in that beginning balance column for cash. Whenever it's a separate fund investment, you're specifically investing money in the fund. So it will then disappear from beginning cash balance because you have to purchase the investment. Once you record that in the financial data by fund section and you purchase the investment, it will increase your investment beginning balance and give you an ending balance. Okay, so total monies, there really is no recording in the AFR because you have total monies. You're not taking it from one fund and having to record it. You just need to have a memo somewhere in your financial software. Most of the time it's the treasurer who records this and lets you know you have a total monies. However, it's not something that shows up in a specific fund on. Oh, did it go out or am I losing my mind? Okay, then for a specific fund, you're recording it within the actual financial data by fund section in the fund itself. Because you're purchasing, once you purchase an investment, it will show up in the beginning investment balance. Then when you sell it, it will decrease your ending balance for the investment, okay? So total monies stays how it is. There just needs to be a memorandum account on the ledger somewhere showing you have a total monies investment, okay? The treasurer should have this information. However, if you have a specific fund investment, that's where we're going to see the activity. And your treasurer really should be letting you know when you have specific fund investments, because from a reporting standpoint, you guys need to be made aware of that, okay? Because if they're doing a specific fund investment, they're actually on the cash book on the right side in the top half, they're moving money from an actual depository account into an investment account. So what you're seeing on the treasurer's side is the recording on the cash book. Then whenever it comes to you guys reporting in the AFR, they need to make you aware that you have funds set aside, but it's within that fund, so your cash balance will be different. It will go down, but your investment amount will go up, and it will equal at the end, because most of the time when you guys do those CDs, it doesn't affect the cash balance because you're just moving it, but we're keeping it in the fund because it's a specific fund investment. So I just recommend working with your county treasurer whenever you're entering that information. Does that help, or did I confuse the room? See, you guys are like, nah, we got this. I don't have to deal with the cash book. Yes. Run, Mike. Take the glow sticks. Look, I'm so proud of him. I should take a photo. Look, thank you. Yes.
Does that mean then that we run it through our financials? That's the question and the trouble we run into sometimes.
Okay, so that's the thing is, I've talked to a couple counties about this, and I think some are getting written up because some software providers are telling them that whenever you have an investment, the only way you're going to know you have an investment is to make a new fund. Okay, that's extremely confusing for you guys because you guys have an extra fund that's added. And so if you don't know that that's like, I think some people, and correct me if I'm wrong, do you have a total monies and you made like a whole new fund and it's at the bottom of your financials, like it's showing as a fund? Or do you have a specific fund investment? Like
specific fund investment.
Specific fund investment. So most of the time in your financial software, there should be a way to set aside the money within the fund so that it can't be, in a sense, spent or budgeted, because that's not available. It's locked down. I don't know how your software does it. Do you have LAO?
We do.
Okay. Is there a LAO person in the room? Maybe. I don't know. But I would recommend talking with your software provider. What it really comes down to is when we're looking and we're auditing your ledger, you shouldn't have it set out in a separate fund because that makes it more confusing because you think you have another fund, okay? It needs to stay within that fund, but you need to know that it's investment money. So I don't know if you can categorize it in your software to set it aside within the fund so you know it's not able to appropriate or spend. It has to stay there. I don't know what your financial software does and how it allows you to show it's an investment in a sense. So I would recommend talking with them because I know that one county had to set up another fund, but again, you guys change offices. So if you leave office and someone else comes in, there's a whole nother fund that's now appearing on your funds ledger. Right. When you do the upload, if you do it and you don't check it, then you have it in two places and we're overstating our fund balances. So the way that we prescribe a manual system for accounting for investments, and most of the time in a manual system, you would just write down and have a memo saying this is how much is being like set aside and invested within this fund, well, that's manual. That's just adding a line and showing that that's set aside. However, in a software system, we don't prescribe how that works, so we would have to talk with the software provider on how to do that. It might be where the software says, the only way you're gonna know is if you include it in financials and create a fund. However, you need to remember to not report that fund twice. You're already reporting it on this line. Does that make sense?
It does. It
Okay.
does, yes. Okay, thank you.
Yes. So Lau. Okay. Okay, so Lau will be able to help. Okay. Thank you. Okay. Next question or more investment questions? Those are always fun. Okay. This one is a question for you guys because I have a question about your question. If we put CVIT and FIT into county general, do we have to into miscellaneous or account line number for the CVIT and FIT? I just feel like it keeps going in and out. Okay. Are we talking about once you seed it into general fund where you appropriate it? Do we think that's the question? Like what account line? Or who was in the room that asked the question? Jackie, what do you think the question is?
I interpret that question to ask if they receipt it as miscellaneous revenue or if there is an account number, a receipt account number for FIT and CVAT.
I don't think that there is a receipt number for that. You're probably going to have to do that.
I think there is.
Is there?
I believe
Okay.
there is.
I don't look at the receipt codes. You guys should know that. Okay, here.
Yeah.
Well, I'm on Michael's computer. I'm not going to do that. I would poke around, but that's invading his privacy. So I'd have to go pull the receipt codes on Gateway and look and see where it is on that listing. Would it be, I can't think of it off the top of my head. Now I'm remembering there is a receipt code for it. I just don't know. It's 100. Yes, yes. So it is on there. It's on our website under counties, Gateway, and then it's under receipt codes. That should be where the receipt code is. So thank you, Jackie. I was reading it as an appropriation question. Okay. So 3, this is our first year collecting previous years of taxes for an eligible homestead. It is our understanding that the state of Indiana should receive 1% of the collected taxes. How should this payment to the state be made? So you are correct. The 1% is in 6.112-37, section F. This is a very, very long IC code. That's where it says the 1% total civil penalty collected under this subsection shall be transferred by the county to the Department of Local Government Finance for use by the department in establishing and maintaining homestead property databases, things like that. This is going to go into your remittance fund. So in the 7,000s, that's where it's going to go into so that it can go to the state and then be distributed to DLGF, okay? So it's in your remittance funds. That's where it's going to be. Did I answer that? Yes. Yes, it's 6-1.1-12-37F. It's where it talks about the 10% and the 1%. That's kind of where you want to live. Okay, TIFs, me and Mike's favorite thing to talk about. Okay, is TIFs still be available along with abatements? I don't know what this question is asking. It says, is TIFs still be available along with abatements? Oh, is abatement still available in a TIF district? Is that how you interpret that? Okay.
Is there some reason people think it isn't?
I'm confused. Do we know if there is still did statute change? Is that why we're asking this question? I need more information. See, Mike set me up. No, I'm just kidding. No, but I don't know why we're asking the question. Jackie, do you have a clue? Okay, I don't have a clue either, but thank you for clarifying.
Eventually, the way that they're increasing the amount of the business personal property, there will be no need for abatements because it's so high.
Is this why you think they're maybe asking that question?
I think I said that right.
I think that's
Or right. I'm just saying future. Right. That's what I was getting at.
I think we'll have to wait and see what happens with that one. I also am cognizant of the fact that we are entering the Department of Local Government Finances
Yes.
sphere again. I hate to keep giving that answer, but you don't want advice from us on that. You want it from them. So
You definitely don't want me to provide guidance on that. Okay. I'm going to keep going. Can you keep your monthly payroll ledgers on a thumb drive as backup rather than paper printing the monthly reports? Would this be sufficient in an audit? So my first question is, are we talking about, are we putting everything on a thumb drive and that's the original document that we're going to audit? Is this someone's question in this room? That's how I read it, is that can you keep your monthly payroll ledgers on a thumb drive, but as backups rather than paper printing? So is the original is still within your software system, if I'm understanding. So thumb drive is our backup, and is that how you're deciding to do your backups? So there's a couple of things to consider. First off, where's the original document? If the original document is accessible within your software system, then you might not need to print them. However, if you cannot go back in your software system and get those payroll documents, then you will have to have a way to provide those for audit, okay? Now we start getting into like the record retention, things like that, and for backups, I need to talk about your process and procedures. So if your backup is a thumb drive, what happens if your thumb drive is lost? What happens if someone dumps water on it? Then all your backups are gone. Where are original files at? Where are they housed? And you also have to be cognizant of record retention policies. Most of the time, backups go to a server or something like that other than a thumb drive. So I would maybe recommend reviewing your backups policy, trying to determine what's maybe best and safest so that you know that you can access that information. And if we're talking about getting rid of any paper files, we really need to talk to IARA, especially if it's the original document. I doubt that it is. It's probably your software has the original documents and they're probably electronic. However, I know some counties still have manual payroll records. So whenever we start talking about that, that's more of a record retention IRA space. So I don't know if I answered that well, but I feel like I had more questions after answering it. What is the process to send 2+ year old outstanding payroll warrants to Indiana unclaimed? So there's just two things we need to talk about. So statutorily, a check that's written is good for 2 years. That's in IC 511 10.5-2. So after 10 years of the date that it was written, that's when you can receipt that money back into the fund that it was spent from. However, it's payroll money. It's due to somebody. So because of that, you have to also consider the presumed abandonment statute. So that is in 3234-1.5-4, number 5. For a payroll card or demand savings or time deposit, including a deposit that is automatically renewable 3 years after the maturity of the deposit. This does not include a deposit that is automatically renewable, blah, 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 blah. So number 5 deals with payroll. So technically, 2 years is up after the date that you wrote the check. You do the math, you receipt it back into the fund. It's not presumed abandoned until 1 year after that, from the date that it was originally distributed. So you have to go 3 years from the date it was distributed, okay? You have to keep remembering when you originally wrote that check. 3 years after that date, then is when you can say, I as county don't have to hold these funds anymore. I can turn them over to Indiana unclaimed, okay? I know that some counties are just, after 2 years, receipting back in these checks and keeping the money and not remitting them to Indiana unclaimed. If it's vendor checks, that's different. Vendor is different than payroll. Payroll is due to somebody. This is like a trust item, okay? So like the clerks and things like that, they have to hold trust items for 3 years. They do that because it's someone else's money. That's the same with payroll, because in that 1 year between after the check's no longer good, somebody that did work for the county, that was their payroll check, they could come back to you and ask you to reissue the check. You would then reissue to them, fingers crossed that they go and actually turn that into the bank so that you can get it off your ledger, but you have to wait 1 year because it's not yet presumed abandoned, okay? Vendor checks do not fall in this category. So if you pay a vendor check, it's good for 2 years. However, if the vendor does not cash that check after 2 years, you don't have to give it to them. There's nothing in the presumed abandonment. That check just goes receipted back in after 2 years, and you're done. If there's any contractual obligations that you might need to consider, but vendor checks do not, if they don't cash it, they didn't cash it. That's your money. After 2 years, you receipt it back in. Did that help? Is there one more, or is that my last one? I feel like that's my last one.
Real quick question.
Yes, Jackie.
This really isn't my question, it's somebody else's.
Give her the glowing stick. No.
We have a treasurer who wants to void the check and not receipt it back in.
The problem with voiding a check is you're voiding it, again, I don't know software systems, but whenever we're voiding a check, I'm assuming it's going backwards in time. We're voiding it back in that point in time. It's not showing up on your records when you're receiving the money back in. Okay, so I would recommend to not void the transaction. I don't know if there's a way to void it, but post it today so it receipts back in. That doesn't seem like something that is logical. I would think that you'd have to void the transaction, and if it goes back, then you receipt it back in. Like, that seems like a lot more work. What I would do is not void the transaction, receipt it back into the ledger as of the date so you have that documentation, because really voiding is going back and backdating. It's just like, and you're not affecting current year ledgers because you've already rolled forward. That's the problem. So let's not void those. And I know you guys are auditors and I'm like scolding you, so I apologize. I'll say it to the treasurers too. Okay.
So if I'm correct in what you're saying, then the 2-year-old void process that is in LAO for financial, we're not supposed to do then?
Well, that's the question, is when's it voiding it and when's it recording it?
I would do, like, for example, today's date.
So
and
it
then,
would,
and then I have to go through a whole process and know what a fund and what account and
So-
everything else.
it would allow you to post it today.
Yeah.
Okay, that's fine. The
Okay.
way that Jackie kind of asked the question was it's going back and it's not doing it as it's posting it today, right, Jackie? Because if they're not doing the process you're describing, where you're actually voiding it as of today's date and it's showing in your records as of that date and time, but it's going backwards, that's an issue to me. So there's a 2-year void mechanism. Okay, as long as it posts current date and you can void it that way, I don't have an issue with that. I have an issue if it's posting it all the way back until the 2 years ago date. So sorry, let's clarify that.
I have a question about jury pay. We have a lot of people that, we get paid $15 and never
Yeah.
cash their checks. Does that have to go to the state?
I think, okay, hold on, I'm looking through. Number 1 is for traveler's checks. Number 2 is for a money order. 3 is for state or municipal bond. 4 is for debt of business association. 5 is payroll. I don't consider jury pay payroll. I don't consider that payroll.
It's not payroll,
Okay,
for sure.
for money owed to a customer, that's not it. Number 7 is for an amount owed by insurance. That's not it. I think it's down here in the court one, maybe. For property distributable by a business association. For property held by a court, that's trust. Number 10 is for property held by a governmental, that's municipal bond interest. That's not it. For bonuses, for deposit of refund owed, Number 13, I believe, is all encompassing. I don't consider jury pay a vendor check. Am I right, Mike? I think it falls under 13 for property not specified in this subsection or section 8 and 9 of this chapter, the earlier of 3 years after the owner first has the right to demand the property or the obligation to pay or distribute the property arises.
Yeah, I haven't gone through the statute the way Stacy just did, but I would think the catch-all provision would apply here. So I think
Yeah.
that's going to be the one
Because
to look to.
you would have to say, do we classify it as vendor? And to me, that's not vendor. That's more reimbursement. And if they did file for it, they just haven't cashed the check for it, that's when I would kind of, I think it falls under 13. I would err on the safe side and do that because you don't want to not turn stuff over.
So it has to go to Indiana Unclaimed? So you're saying it does have to go to Unclaimed?
Again, quickly looking at it, I believe it would have to go to Indiana
So
Unclaimed.
jury checks, no. Mileage reimbursements and like
I think because
if they
they're
overpaid on deeds or something.
there is also another one. Where is it? Was it 8 or 9? Nope. Where did it go? I think it's considered a wage. So payroll might be under 11. Hold on. For wages, thank you, Shelby. Shelby's literally reading my mind because I'm like, where did 11 go? Okay, for wages, commissions, bonuses, or reimbursements to which an employee is entitled or other compensation for personal services other than the amount held in payroll card 1 year after the amount becomes payable. This one's tricky because this one is 1 year you turn it over. So to me, reimbursements would fall under this, which I don't know if jury pay we would consider reimbursement. I don't think it falls. I think it's under 13. But reimbursements for like mileage, to me, I think would fall under number 11 of the presumed abandoned statute. So whenever you have something of, go ahead, Mike.
I was going to say, I think number 11 applies really to reimbursements that are owed to employees, right? Is
Yes,
that the limitation? So if we're talking about, are we talking about reimbursements owed to employees, mileage reimbursements? Then that's going to be the right, going to be the right subsection.
Yes, that would be under this one. So I think the one that I quoted earlier for payroll is actually 11 and it's not 5. Sorry, I didn't go down far enough. Because this says wages. So if it's a payroll check, it's under 11 too, because it has wage, bonuses, and reimbursements to employees. That's how it's worded. Whenever it's 1 year instead of 3 years, this is where it gets hairy. I would recommend if they're still an employee, ask them to cash the check. If they lost it, do the void process and allow, if you have that, or receipt it back into the ledger as of that date, reissue that check from that same fund, make sure they cash it. If they don't, you don't have to wait the 2 years because it's technically presumed abandoned after 1. So to save your guys' self and documentation-wise, I would show where you try and get them to cash the check, and if they don't, turn it over to Indiana Unclaimed, okay? Oh, sorry.
So hypothetically, if a county has not been doing this, how far back would you go?
I wouldn't go that far back. This could be, so we might need to talk. I don't want to call you out and go how many years because I don't want to know. So it might be something where we need to discuss. Is it for everything, or let's get all of our ducks in a row and we'll chat.
Yeah,
Because see, here's the thing. The second you guys void it, you receipt it back in, you probably, hypothetically, are you going to be able to go back and find that where you voided those transactions on that date and try and like keep going back? That's going to be a lot every single year because depending on when you first distributed it, technically it should have been. Are we going to take exception to it? You don't know what you don't know. It should have been going to Indiana Unclaimed. You guys, we might need to figure out how far back. I don't know. Mike, I don't know if there's anywhere in statute that says if you haven't been doing this.
My instinct is that the really important thing to do is to correct it prospectively, going forward. Like
Yes.
That's the main thing. Once you're aware of the rule or aware that there was a practice that needs to be adjusted, I mean, unraveling it is going to be messy, right? So the main thing is to fix it going forward, I think.
Yeah.
So
There's one behind you, Mike.
I think the question you have came from me,
Okay.
okay? And I was talking, there's two different things. Now we're rolling into the jury voids, okay? Most of ours every year for the past 10 years, all the voids, at least 100 a year on the 2-year, are from the jury. They're put in as vendors in our system.
Okay.
They are put in as vendors.
How many others are put on it? Okay.
So therefore, we do not send them to Indiana and claim it just goes back into the fund.
I could honestly see that.
Now,
I don't know if that's how do you categorize if someone is a vendor or not? I guess is my question, because you're paying them via claim. Is that why we're saying they're vendors?
Yes.
Yes. So I have a contact. If you want to shoot me an email, they're coming to present at the clerks conference. I believe her name is Amy Hendricks or something like that, Hicks possibly. I want to put you in contact with her because I think it's how we categorize them. In my brain, I'm thinking jury pay, they should have been paid for it. Technically, if you're saying they're a vendor and it is on a claim voucher, which that makes sense, they appear as a vendor.
Yes.
I would say then you don't. Didn't think of it that way. Thank you for bringing that up. But let's clarify with the AG's office that those should be things categorized as vendors.
Okay.
I think we have a strong argument, and I agree with you that they definitely could be.
But the one with the payroll, 10 years, had no clue that it was supposed to go to Indiana and claimed until the treasurers came back from their conference. And I said, well, how does that go? She said, well, we just turn it over to you, and then it's on you. You have to figure it out. And I'm like, well, I guess I'll ask that at conference, because normally I don't believe I voided. I believe I just receipt it back in.
Yeah.
Yes, do not void it as a 2-year void.
Yeah.
I just receipt it back in.
Either one is right. It sounds like Lau's process could definitely receipt it in as that day.
Then it's not right if we're not sending it to Indiana and claim, though.
No, part of it is, though. So it's in your records. You're putting it back in there. It's just the reporting it to Indiana unclaimed. You just need to do moving forward, like Mike said. It's going to be so hard to go back and figure out what hasn't been done. Most of the time, the clerks do this for their items that they hold in trust. Unfortunately, some of these items that the treasurer has for old outstanding checks, it would be something that most of the time the auditor would be turning over to Indiana unclaimed. It would be between your two offices. Again, I don't know who should be reporting it. To me, the treasurer is the one with the check. Most of the time, the clerk, they hold the check, they write the check, they disperse the check, then they receipt it back in, and it's only them keeping it in their ledger. However, with you guys, you're not the ones, you're making sure that the check goes out, you're making sure it's receipted in. The treasurer's just keeping track of all those old outstanding items, then reporting them to you. I think you guys would be the one, in a sense, doing it. I don't want to give you more work, but to me, it would be your office, because there should be a mechanism for once the treasurer says, hey, these have been distributed, they're old outstanding, we need to receipt them back in. It would make the most sense that the auditor's office is the one receipting them, and then once receipted and presumed abandoned, then they turn them over. But you'd have to keep track of which ones you just receipted and voided in, or however you did that. And then if it is 3 years, if it's 1 year, you just have to look at that presumed abandoned statute and determine it going forward. So send me an email, and I'll get you the contact for the AG's office. Because
does anyone else do the Indiana unclaimed? Send the payroll. No one else does it either?
There's a couple people raising their hand. Maybe we're all just learning about it.
It was brought up at the treasurer's conference.
So next year, you're saying in fall, you guys want Indiana Unclaimed to come speak? No, I'm just kidding. We could do that. I mean, because maybe it's something that we need to discuss, and you guys maybe just didn't know. It's okay.
I will tell you, in my experience, the times that I've asked the Attorney General's office, is this unclaimed property, does it need to be reported to your unclaimed property section? I think they've told me yes 100% of the time. They've never told me something didn't qualify. So, yeah. So that's my end. That's it.
Okay. Now that I've scared all of you, I apologize. I just like to create havoc wherever I go, you know? Okay, that was my last question. Are you guys done? You guys want to go home? Oh, nope, we have questions. Why Mike's going over there? So, again, once we conclude, if we conclude early, a little bit early, you do not need to sign out because we have adjourned conference. So just don't create a line to sign out, okay? Okay, go ahead. Where's that? Okay.
Okay. I'm actually asking this for somebody else.
That's what they all say. No, I'm just
asking for a friend.
Yeah.
So they want to know, are the transfer fees changing? And if so, what is the effective date and what are the stipulations? They read something that possibly transfers from family member to family member are going to go away. We won't be charging them anymore. Have you heard that?
Mike, did that come? I have not.
Okay.
I can write it down and I can look and see, do some kind of cursory review. Do we think it's like deed transfers or transfer of debt deeds?
Yes, just deed transfers.
Deed transfers?
She said that.
Yeah, we read something somewhere where any deeds that were like transferring from family member to family member, you would no longer charge a transfer fee.
Okay, we can look at it and see if we found anything, and I can include it in the Q&A, because off the top of my head, I do not know.
Okay.
Okay. Oh, Jackie, do you have the answer? She raised her hand, but I don't. Okay, yeah, I'm not sure. But we'll add it to the Q&A, and we'll try and get you guys in here. Is there anything else? Yes. Oh, sorry. Two more. Okay. Mm-hmm. Most of the time, there is an overtime line on the salary ordinance under those departments, and that was her question. So on the salary ordinance, do you have to have a budgeted line for overtime under a specific department for clarity reasons, things like that? I would say yes, because it's when you look at the salary ordinance statute, like we've talked about, there's only certain things that are required. However, overtime is compensation. I would recommend putting it on there, especially if there's a rate that goes with a specific position. You don't need to put a name, but if it's an overtime rate for like several of the positions within that department, I would recommend putting it on there. That's more clarity than anything, so that there's no question to what is their overtime rate if they're eligible for overtime. Sometimes they do a rate per hour. That's what I normally see for overtime. So you could do a rate per hour and make sure that's classified on there. Or if you're just budgeting, like, it's up to you how you want it to appear. If you wanted to say we've only budgeted $34,000 for overtime for this department for the year, you could maybe do that, but I feel like the rate per hour makes the most sense in that. I don't know, Mike, if you...
Yeah, and it's just there's so many different things we can be talking about when we're talking about overtime. So we can be talking about the mandatory FLSA rate for people who are covered by FLSA for overtime purposes. In that case, it might be as simple, because that regular rate can fluctuate so much depending on what happens week to week and what employee we're talking about. It can almost be enough to say we will pay these employees in accordance with the FLSA rate. Of course, there are all sorts of other types of local overtime rates that exist. Those local overtime rates for people who are not covered by the FLSA rate, or if you're paying a rate that's more generous than the FLSA rate, that has to be on the salary ordinance, right? Otherwise, how does the public know about the rate that's being paid? How do our auditors audit against a particular rate that's being paid to an employee to know that that's consistent with the salary ordinance? So it depends a little bit. I'm not trying to be difficult, but if it's just the FLSA rate, that's relatively straightforward. If it's something else, you really need to be writing it down in some sort of definite way. So.
So it's funny, Mike and I had this conversation yesterday with someone at lunch. We're really exciting people, okay? Whenever it comes to longevity, most of the time that's something that's established in a policy. So if your salary ordinance points to a policy and say, like, anybody on this could receive longevity, please reference this policy, that is fine in those situations because it depends on the person who's actually receiving what longevity pay. So as long as your salary ordinance is kind of pointing to another place where the compensation is established for somebody, that would be fine. I don't think we would take exception to that. It's the instances where it's not clear who is paid what and what can an individual receive. That's whenever it becomes more confusing during audit.
Can I add one thing
Yeah.
to that? If you put the appropriation in the salary ordinance, a dollar amount, you would have to amend the salary ordinance every time you did an additional. So the rate of pay is really,
to me, that's the best.
right.
I think
remember.
I think an appropriation is going to be more cumbersome to keep updating, just like names on a salary ordinance is. That's why you don't want to lose the intent of council. Council needs to know what positions, what rates of pay, and if they're exempt, non-exempt employees. Those are the really important things. However, sometimes the more information we shove on those salary ordinances, the more work it is for you guys, because how much every single time there's a council meeting, you guys who have really super duper cumbersome salary ordinances are amending them constantly. And I bet that's exhausting. So I would, again, look at the statute on what needs to be included. You want to show we're budgeting for everybody and their salaries. However, you don't want to basically put too much out there that's willing to change, especially if like full-time, part-time, exempt, non-exempt. Like if we keep changing those classifications within the year and those are on the salary ordinance that's adopted during the council meetings, that's more cumbersome for you guys to keep updating. So most of the time there's a matrix that goes with your salary ordinance that you guys keep in your offices so you know how to pay those people. That's something that's more of an internal document, not something that's on the salary ordinance.
I have a question about purchases. Our prosecutor's office seems to be the only one that we have a lot of trouble with. They buy a lot of candy, energy drinks. This month we had on the Visa a women's blazer coat.
Oh, okay.
So pillow covers, wreaths for the door. Like, do we have to have...
Are they sleeping there? I'm sorry.
They have a lobby that they like to decorate.
Okay, so the pillow covers are for couches that people come in and sit on, and they're decorative.
Maybe just their staff. I don't know how many, like, public citizens
So
go in there.
I have lots of questions. The only questions, though, that I'm going to ask are, what funds are we using?
General funds.
Okay, general fund. My question to you is, do you have an ordinance on, like, types of purchases that are not allowable or allowable in nature?
I don't believe so that I'm aware of.
I would recommend going back, determine if you have a policy, because that's the first thing is, do you have a policy that allows for these types of things? If not, then my follow-up is, how is it a county business purpose? I have a hard time with a lot of those things.
Yeah.
Because if it's a county business purpose, my question would be to you is for the candy and the energy drinks, can anybody come in and get those, or is it just for their office? I feel like that is a very good question to try and make that point. So I recommend having those conversations and seeing if you have a policy. And are they also just using a credit card and then you're finding out later?
Yes.
Okay, so credit cards. So you're saying in fall we need to talk about credit cards? Okay, that's fun. We can do that because I would look at your credit card policy. It should also say what you are allowed to use your credit card for. To me, some of those things probably shouldn't be credit card purchases because they're bypassing the claims process, and you have things to back that up. Okay, because it's really abuse of the credit card at that point if it continues to be using it for those items. So I feel like I'm giving you homework, but things to consider, and go back and look at your local policies. Your local policies might already have something saying it's not allowed. And in that instance, I would, next credit card, say this isn't an appropriate use of funds. This appears to be a personal expense.
Okay, thanks.
Just one, I know prosecutors' offices, sometimes judges are like this too, not all of them, but some of them where they think sort of any of those regular rules about purchasing clothing or food, those are inapplicable. That's not the case. That is to the extent they're independent. That doesn't mean that they have free reign to go out and make purchases, and the rules about it having to be a lawful corporate purchase and purpose of the county don't apply. They apply to prosecutors as well. So, so feel free to remind them of that.
Okay. Anything else? You guys want to go home? Okay. Bye, guys. Thank you for coming to conference, and we will see you in fall.